Thank you for joining us. I'm JT Engstrom with FreightWaves, here with Paul Asel of NGP Capital. Paul, thank you for joining us.
Pleasure to be here with you today, T.
It's a pleasure to see you. It's been some time, but it's always great to have you join us.
It is. So we enjoyed having you speak at our World of Connections last November, and that seems like a century ago.
Right, that's correct. Was that November? I remember I was with Andy Clark, and we were in San Francisco in a wonderful event venue and a phenomenal conference you hosted. And I guess that is less than a year ago. That does seem like forever ago, but that was a tremendous event you hosted. Thank you so much for having us. And you're still in California now. We hope everyone's safe and doing well with some of the issues going on over there.
We have been sheltering in place here, like most people have, for the last 6 months. And but what we found is that, at least in a micro sense, we are as productive from home as we are in the office. But we appreciate that that's not true for most, and so we're eager to get back to work as soon as the situation permits.
Yeah. Now, you have a wealth of background in the early stage space investing. Can you talk to us a little bit about your experience both domestically and international, and not just allocating capital, but also being a mentor to executives and helping them grow businesses and see successful growth throughout various stages?
I've been investing in venture and doing that on a global stage really for most of the last 30 years, and started investing in Silicon Valley and then worked in emerging markets for several years. And then about 15 years ago, founded NGP Capital. We have a global perspective, investing from Europe, China, and the United States. When I started in Silicon Valley, we used to have the two bridge rule, which meant that if you cross a bridge, that's a bridge too far. And now we have the two flight rule. Anything that's within 2 flights is fair game. But I think what part of the message behind that is that technology used to be a cottage industry. It's now a global industry, and we are seeing technology centers and innovation emerging from around the world. When I first started investing in China back in 2008, the common mantra from the entrepreneur was, we are the ABC company of XYZ business in the United States. And quite predictably, when a new company emerged in the U.S., within 2 or 3 months, we would see the equivalent of that in China. That stopped about 2012. And what we heard here when we invest in China is, here's the local problem, and here's what we're looking to solve. So we've seen indigenous innovation emerge from Europe, from China, and the United States. And I think that makes it a much more interesting place to invest, because we're seeing great ideas come from all around the world.
Yeah, that's tremendous. And now, transportation means a lot of things to a lot of people, right? And traditionally, when I talk about transportation, I'm thinking of freight, but recognizing there's also passenger, and within both of those buckets, there's a lot of different modes. When you think about transportation, specifically with your focus, can you talk to us a little bit about where you have focused your most time historically, but also kind of what do you find most interesting, which may not necessarily overlap one-to-one?
I think of logistics as the movement of people, places, and things. And that's perhaps a bit unusual. It sounds like it's more investing in nouns than it is in logistics. But when the more we've thought about it, of course, there's the movement of things. The movement of people has as much logistical elements to that in many types of businesses as the movement of things. And then when we think about it in a more macro sense, it's about places as well. In the short term, you can think about places being fixed. But in the slightly longer term, those things are transferable as well. And one of the things that we've learned investing in logistics is that the most value is not from the nodes, but from the flow. And if you can change flow by changing location and optimize around that, there's tremendous value that can come in not only optimizing from A to B, but how things move multimodally across that whole chain.
Yeah, that's remarkable. And we certainly see a lot of multimodal mix shifting opportunity in the spaces I focus on. And that is a pretty significant discussion topic amongst certainly 3PLs, but also in-house logisticians for shippers, and thinking through not just sourcing capacity better within a given mode, but also how can we use alternative modes to move given elements of freight, again, specifically for me, but recognizing, but that's equally relevant for passenger as well. As we think about some thematic trends in venture investing, can we talk a little bit about, first, in your decades of experience, what you've seen as perhaps any philosophical shifts with allocating capital, whether it be capital structuring or valuation metrics or willingness to take on risk? And then I think we can use that to parlay pretty well into a conversation around investment themes around specific assets or specific asset classes.
The fundamentals of venture are the same as before. One of the things that has changed is the magnitude of venture. And so when I started in the industry 30 years ago, a large investment at a Series A stage might be $1 million, and now it's probably 10x that. We look at the size of funds; they've moved 5 to 10x over that period of time. I think there's a couple reasons for that, and then there are also implications as to how venture investors can invest with that. And one of the things that we are seeing is we have, over the 15 years since I founded NGP Capital, we've moved from a mobile-first world to a data-first world. So really, the first 10 years, we were investing around the mobile phone and helping companies move onto the phone and creating businesses that were mobile indigenous. For the last 5 years or more, we've been investing in data-first companies, the belief that everything and everyone will transmit a signal, that intelligence turns signal into noise. And we've seen that the internet affected 15% of GDP. And as McKinsey said, the Internet of Things is going to disrupt the other 85%. So when we look at the growth of venture capital, I think we're seeing a couple fundamental things. So one is the expansion of the field of play. And 10 years ago, logistics was out of play for venture capital. But with the amount of capital that we have, with the move to the data first world, in the logistics industry is in play. 85% of GDP is in play. So that's one of the reasons that we're seeing the expansion of venture capital. We're simply playing on a larger field. The second reason we're seeing the growth of venture capital is that we're moving from enabling investments to disrupting investments. For the first 20, 30 years of venture capital, it was largely about enabling existing industries, but selling software into industries. Now we've got the capital to be able to go out and fundamentally rethink industries to disrupt industries. And so that creates a much larger purview. We're playing on a larger field, and we've got different ways of playing than we did, say, 10, 15, 20 years ago.
Yeah, that's a tremendous perspective. And when you think about venture investing from a data-first perspective, that certainly hits home with a lot of things we do here at FreightWaves. And so I'm interested to hear your thoughts on peeling that onion back a little bit in terms of where you see some significant opportunities from a sector or macro level within the transportation space, and how you foresee the ability to leverage either existing data or perhaps data that does not yet exist, but perhaps could through alternative mechanisms.
I've been investing in and around logistics for the last 8 years, and really around location-based assets, together with groups like Here Technologies for the last 15 years. And over that time, I think we have seen a fundamental shift. 10, 15 years ago, it was more of a point tool solution selling into the freight industry. And now we're seeing some very interesting companies emerge that are looking to disrupt different segments of the industry. And then we're seeing tremendous use of data to apply logistics and efficiencies in different ways. So if I go back to the initial analogy I used, flow versus nodes, we invested about 5 years ago in Select, which was with a professor from MIT who was looking at supply chain optimization, and he was looking both at return logistics and logistics to the stores, and fundamentally thinking about how do we optimize the placement of goods, and rather than returning all the way back to source, are there different ways we can use that? And that was something we couldn't have done 15 years ago, but based on the wealth of data that we have, we were able to apply that intelligence in different ways and select very promising technologies. And it got bought very quickly within about 2 years of our investing by Nike, who wanted to really adopt that into really change their whole logistics industry. A company that we invested in recently is a business in Europe called Shipeo, which is in the transparency space. And we invested in the company pre-COVID, and I think we've seen that that is a sector whose time has come. Of course, we've seen Forkites and Platform 44 do some very interesting things here in the U.S., and Shipeo's in an analogous space. And one of the things we've seen in the logistics industry in the last 6 months is a move from a kind of unifaceted or narrow view of efficiency to a broader view of resiliency. So for the last 20 years, the emphasis has been really on cutting costs to be more efficient. But now a recognition that part of that efficiency involves flexibility to be able to adjust in real time to shocks like this, and having transparency that's provided by some of those companies becomes very important. And being able to look across the whole supply chain, not just one segment of that, to be able to optimize the flow of goods. And we see a lot more technology coming in to be able to bring in multimodal efficiencies, both now and going forward.
Yeah, that's a tremendous overview of some things you've seen in the market. And I think what would be interesting for various members of the audience to hear is, as founders develop their thesis or their hypothesis on the market and developing their value proposition statement for building out the foundations of growing a venture stage company, as they approach you, what are some core tokens of advice you would give to these early stage founders as they're thinking through what should the model be, how do we accomplish it, how do we appropriately but perhaps not overcapitalize, how do we think about acquiring talent, how do we think about being deliberate with deploying that capital with talent, with technology, with all of the required resources? I think, given your wealth of experience, some sage wisdom would be certainly valuable to them, but also to the audience.
Well, we all are a product of our experience in different ways. So one of the things that I've done just here over the summer, we've had a slower time. They say that races are won in night and still win. So how do we use this still win as an opportunity to rethink things slightly? And one of the things we did is we went through our entire portfolio of 100 companies, and we looked for patterns. And we found a couple of interesting things that came from that. One is that I think there's a perception that industry experience is very important. And while we can't discount that, we have found that disruption happens from outside the industry. And quite frequently, it's the people that incremental innovation happens best inside the industry. But disruptive innovation happens best from outside the industry, as people who can come in with a different perspective, a different set of experiences, and then apply that to the situation. So we think a little bit differently about experience. We think of the value of experience is fundamental principles, business savvy, knowing how to succeed in different scenarios, not necessarily domain experience within that industry itself. The other thing we found is the importance of having a complete team. It's just kind of natural behavioral economics that we all get excited about a great promoter. But what we found is that when a great promoter lines up with and has inherently within his or her team the skill sets that are aligned with the key success factors of an industry, then having promotional skills increases the likelihood of success. On the other hand, if you have a great promoter, but the skill sets are not well aligned with the key success factors of the industry, that actually strong promotional skills can work against you. So I think we've developed a more nuanced view. What does that mean for entrepreneurs as they're thinking about opportunity? The first is, if you've got a great idea and if you're passionate about it, don't be daunted about the lack of industry experience. Bring some people around you, bring advisors around you who can, we like to call them jungle guides, who can tell you where you might be going wrong from an industry point of view. But don't be daunted about going into a new space if you fundamentally believe you got a different way of playing things. And then the second thing is, at the same time, be humble about what are the skills that you're going to need to be successful. How do you surround yourself with the right people to give yourself the best chance of success?
Yeah, that's tremendous advice. That's phenomenal advice, actually. And, it's interesting to hear your perspective, not just individually, but as you've assessed your current and historical portfolio as key themes, and perhaps finding some counterintuitive success factors, which, may not be obvious to the traditional interpretation mechanisms. One question that comes to mind is, as you think about early stages, so coming off ground, so you've now launched from the idea phase, you've built out your advisors, you're thinking through how to implement a thesis. What are some of the core steps that are absolutely critical in the kind of 1, 2, 3 step early phase stage in terms of taking an idea and putting it into implementation?
JT, that's a great question, and it's one that we've actually thought a lot about in the last year. We, really as part of that analysis, we've long talked about us being investors that are post product market fit, and so we are investing in companies that have a product that's out in the market that has referenceable customers, and those customers are validating the technology and the business model. And that's what we've said for 15 years. As we've gotten further into it, we thought that everyone in our team understood what product market fit meant. And then as we actually did some further research on this, we all had slightly different definitions of that. And as we parsed through those, and we came to a common framework on what product market fit means. And we also went back a lot to looking at how the industry defines that. Well, one of the things we found is that there's no single definition of product market fit. In fact, there are multiple definitions, and we came up with 3 different layers. There's weak, moderate, and strong product market fit. The weak definition is around product. Do you have a product that works? Is there basic demand in the market? The second, the moderate, is being able to show that demand is beyond early adopters, that is demand that works at scale. And then the third level is proving that the unit economics can work and getting that to work at scale. So as you think about building a business, you can think about it in those phases. And one of the things we found in working with hundreds of companies over the last 15 years is that companies don't skip steps. There is a fairly systematic way that one goes through that. And yes, there are themes and variations by industries and market segments, but fundamentally going from weak to moderate to strong product market fit. And there are different elements within that. is something that we've seen as being a fairly serial progression that companies need to make.
That's tremendous, Paul. Well, with that, I think we could go on for another 20 minutes, but unfortunately we're out of time. Paul Asel, NGP Capital, thank you so much for your time. I'm JT Engstrom with FreightWaves.